Traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is the 4th day of August. It is Wednesday, and this is the Daily Report. Forex Gold is currently trading at 1195.90. It's had a high today of 1204.20 and a low of 1189.80. It's currently trading up about $10 to $11 higher. Traders, as you know, we went long on a position on Friday. In today's report, we're going to talk about that stop and if in fact that should be trailed up. We're going to continue to discuss our upside targets and take a look at the market overall, all on today's daily report. Traders, there's no doubt. The market has come down off of these highs right around 1204. So I'm going to be looking at different levels of resistance that we are currently finding, and obviously 1200 is one of them. We'll talk about that in a little bit. The other thing that I'm noticing is this particular candle that is forming right now, if this body gets a little bit smaller, will form what's called a shooting star. So it's something that we want to be very cognizant of. Because of the fact that we're long, we might want to go in and pull profits. We'll talk about that also. In terms of where we are on the big picture, there's no doubt in my mind at this point that we are absolutely in that B wave. That B wave is going to be our impulse wave off of this corrective phase that of course began when the market hit that absolute high, historical contract and record high at 1265. I've drawn just a basic straight horizontal line across that $1,200 mark because I want to illustrate something. On a technical basis at least, 1200 is really not superlative support or resistance. However, on a psychological basis, those round numbers absolutely are, whether it's 1100 or 1200. As you can see, we do not have much historical data as we go back and look throughout this market at $1,200. On the contrary, we do see really strong support, and this is at that 38% level Fibonacci basis, and that of course is at around 1180. The next real resistance that I see, again, is going to be our next Fibonacci level, and that's our 23% retracement level at 1212. And as we talked about on Friday, that really is the point or the area that I believe the market has an opportunity to get to. However, before it does get to that point, it absolutely needs to take out and close above $1,200. Now, according to Jim Wyckoff over at Kitco News, the Asian gold market started off strong on Wednesday following some fresh bullish fundamental developments. A report in the Wall Street Journal this week bolstered buying interest in gold. The report said that the U.S. Federal Reserve may embark on a policy of buying U.S. government securities in an effort to monetize U.S. debt. This quantitative easing of monetary policy, well, it could be inflationary, and many believe it would undermine the value of the U.S. dollar. Now, what we are seeing right now is some short covering, and this, of course, is due to the recent selling pressure that when the market was in this corrective A pattern. So we've got short covering from that. And at the same time, we do have fresh speculative buying on interest tied to bargain hunting and the improving near-term posture for the gold market, also according to Jim Wyckoff over at Kitco News. As you know, I tend to be more of a staunch technician, and I believe that aside from the fundamental news, which we know absolutely moves the market, the best way for me to look at it and try to do an analysis on it is to look at the technicals that we are familiar with. Now, in terms of some of the other technical indicators that we do follow, as I said, when we were at contract and record highs, we really can't use the oscillator-based technical indicators because they're simply going to point to the fact that the market is overbought as it moves up. But once we do get a high and we start to trade again within a range, I will go back to my standards, which will be stochastic, the moving average, convergence, divergence, and begin to look again at some of those oscillator-based studies. When we look at our stochastics, this is the fast stochastic. Right now, as you can see, we have just received a cross. And so what has happened is the percent K, which is now sitting at a negative 30.94, has moved to the and above the percent D, which is the slower of the two, which is at a negative 33.18. So that today is signaling an actual buy in the market, and I find that to be a good confirming indicator, of course, of this long that we took, well, back here at this point. Also, when we look at the MACD, we're getting a very, very similar sort of scenario. We talked about the fact that they were moving closer together. They began to diverge again here. But as you can see, as of now, we have gotten that cross that I look for. And we have, in terms of our signals, the red, which is the faster of the two, at negative 7.76, and the slower of the two at about negative 9. It's at negative 8.95. So this right in here is also a good confirming indicator, of course, on an oscillator-based study that, in fact, we are in a nice little uptrend. Now, as you know, I am not looking for this, if it's going to follow Elliott wave in terms of the wave count itself, I'm not looking for this to be a very, very large move. As we talked about over the last couple of weeks, my sentiment is still we've got our corrective wave here. A B wave, which I firmly believe we are entrenched in, should only move approximately 50 to 75%. So in terms of our overall targets, the target is really going to be within this one little area here, in which I think that that's probably going to be where we get some sort of selling pressure re-entering the market, and that's where I'll look to cover the position, unless we get some indication before that that the most appropriate move, of course, is to cover and pull profits. We do have nice profits at this point. We're in at approximately 11.79, and the market's trading almost $20 higher off of that point. As we talked about on Friday, I'm looking for this following scenario to take place. And as I said then, I'm not really looking for the market to go straight up, although it actually has. I would look for a little bit of continuation, and then really what we're going to look for is some sort of candlestick pattern, whether it be, as I said, a dark cloud cover or an engulfing bearish, that gives us an indication that this particular move is over. And what I would look for at that point then would be for us to go into our final corrective wave, which would be our C wave. Fundamentally, long term, I'm still extremely bullish. However, as I said before, we simply need to weather this corrective phase. Traders, at this point, I'm going to recommend we simply maintain our stop, 1175, maintain our long position. Let's take a look at what this market wants to bring over the next couple of days. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading. We'll talk to you tomorrow. Bye-bye.
When I look out my window, many sights to see.